So in Chapter 3, we are going to move on to FICA taxes. It's a whole chapter devoted to FICA. And you're probably wondering, oh my gosh, how is there that much to say about FICA for a whole chapter? But there's actually kind of a lot going on. The other thing we're going to do in this chapter, aside from Social Security taxes, is that we're going to learn down here in number 5 how to do our first tax return. Quarterly tax return, thank you, to report our payroll taxes, our federal payroll taxes. And let's just kind of start this, we'll be doing this all semester, but what federal taxes, payroll taxes do we all owe? What's one thing you know we owe? Social Security. Social Security is really 2 taxes. What are they? Old age survivor and disability insurance and health insurance. So we know we've got to pay that. And how many sides to that is there? Is there just one payment of that? 2, right? What you take out of the employees plus what you match. So you've got to pay FICA, plus what else do we have to pay to the federal government? State taxes don't go to the feds. Federal income tax. So when we're talking about a 941, just to give you kind of a heads up or preview, we're talking about FICA, and FIT. So this is all just review. You guys totally know this. If you added all this up, what do these come to? You pay both shares of FICA. 15.3. What's one share? One share is 7.65. Both shares is 15.3. Why is it important to even know that 15.3 number? Yeah, if you're self-employed, you are paying both shares, right? Okay, good. And then remember this, we talked about this the first week, but let's revisit it. What's this all about? When did we start having to do this? I think it started with the ACA, didn't it? The Affordable Care Act. It's part of funding our health insurance program. If you make over 200 single or 250 married filing joint, do you just pay the 1.45? No, you pay the 1.45 plus 0.9. But only the 0.9 is only on the amount over the 200 or over the 250. Okay. So if I make $201,000, I'm not paying that 0.9% on everything. Does my employer match that 0.9? No. It's just me, and I get hit with that on my individual income tax return. So processing payroll, you never have to worry about this. But when the W-2s go out of somebody, or say you have a couple jobs at 120 grand each, we should have such problems, huh? Then you've got to pay the 0.9 when you do your tax return. Okay. So that was FICA. This is probably a new acronym, but we've talked about the concept a lot. It was 16 years before Congress realized that self-employed people weren't paying any FICA. And then it was like, oh my gosh, you guys should be paying both shares. Self-Employed Contribution Act. So 12.4% OASDI plus 2.9% HI. And you really should become familiar with all of these percentages because the calculations in this chapter aren't hard, but you'll be using sometimes 2.9, sometimes 15.3, sometimes 7.65. So you need to kind of feel comfortable with these different percentages. And again, if your self-employment plus your wages or just your self-employment alone is over 200 grand, you've got that 0.9. And just to give you a heads up too, in the business world or the tax world at least, we call, instead of saying self-employment income every time or self-employment tax, we just say SE tax. And that means the 15.3. Okay? So how much was your SE tax means how much did you pay in FICA plus FICA. So the issue about who's covered under FICA is really threefold. The first one is the same, and of course we're going to see this over and over. Are you an employee or an independent? What does your hiring agent want you to be, an employee or an independent? They want you to be an independent. They don't have to pay workers' comp on you. They don't have to withhold taxes. They don't have to match FICA, right? And obviously, what do you want to be? You want to be an employee because you don't want to have to pay both shares, and you don't want to have to do estimated payments and all that stuff that comes with being self-employed. So that's the first issue. That doesn't go away throughout this whole class. Second issue is what I'm doing considered employment. We'll talk about that in a moment. And then, is the compensation considered taxable wages? And there's lots of things your employer can give you rather than just cash wages. And some of them are taxable for FICA and some of them aren't. So it's important to know that when you're negotiating a package. Here in Missoula, Montana, most of us don't negotiate big compensation packages. But in urban areas, you'll go to the table for a job and you'll say you'll want less in salary and more in stock options because of the taxability of it, for example. So we're going to take a little bit of a look at that. And then if any of you are curious what your Social Security payments are going to look like when you retire, you have to have 40 quarters underneath you, which means 10 years, well, 40 quarters. So, I mean, like I started working when I was 14, basically, so I had my 40 quarters by the time I was in my early 20s, which obviously didn't really determine what I was going to make in retirement because I was working for my proud first job at Wiener King in South Dakota for $1.87 an hour with a hot dog on my hat. It was quite an auspicious beginning. But you can kind of just go see, and it's sort of fun to just get a glimpse and make sure all your wages have been posted correctly. That's another thing. When I went and did this probably 7 or 8 years ago, there were 2 years where I had zeros entered in my wages. I mean, it's just people, you know, when we send in our W-2s and W-3s, it's just people that enter those in Wilkes-Barre, North Carolina at the big Social Security Admin Center. So when I got that corrected, it changed my projected retirement benefits by like $108 a month. So it's worth tracking.
They mail you that every year?
They used to, and now they're paperless. You have to go on the site and sign up and wait for the encrypted something to come back. Takes like a couple weeks to get the encryption password back, but then you have access to make sure that it's being published correctly. And I mean, I personally think it's important to follow. I have found mistakes on paychecks, Social Security projected benefits, and mortgage applications, just because I'm a person that checks numbers. So, I mean, if you can do it, do it. Okay, I'm not going to beat this up because, oops, what did I do? I went all the way back to the very beginning. Sorry, hold on. Because we just went over this in some depth. But the next slide is on where was I? Is on IC versus employee again. And this is just really formal definition, but we're going to, for our purposes, we're going to always come back to behavioral control, financial control, and perceived relationship. So the issue here is say that you've been misclassifying, and this actually happened to Microsoft. When Microsoft first started in the late 70s, early 80s, they had about 30 hotshot coders that were dispersed all over the country that were coding their operating system. And they treated them all as independent contractors. And then, of course, Microsoft went public, and they gave them some stock options. And then, of course, when Microsoft went public, the stocks screamed up the charts. They split. They screamed up again, split. So people that were actually employees at that time in Microsoft got really, really, really rich. And the folks that had been the coders that had been classified as independent contractors had never gotten those stock options. And they sued Microsoft. And the courts reclassified the people as employees. And Microsoft had to pay out tens of millions of dollars to just a handful of coders because they had misclassified them. So that was an extreme example. But if you misclassify somebody, basically you're liable for a penalty that's equal to their share of FICA that they've been paying in because they've been independent, plus the federal income tax is withholding. So the penalties are really steep. I mean, it can shut down a business. I had a gal that was a student here a number of years ago, and they owned a couple pizza places in the valley, and she had misclassified her drivers as independents, right, the delivery drivers, and they had an audit, and they got reclassified as employees, and she couldn't pay the penalties. I mean, they took her businesses. So it's really not something to mess around with. If you're not sure, you can file a form. It's called an SS-8, and you ask them to determine for you what is, based on all these facts, do you think that the person's an employee or an independent contractor? What do you think the IRS always comes back with them? What does the IRS want you classified as? They want you classified as an employee because then somebody's withholding your FIT, matching your FICA, making the deposits. If you're independent, do they get your money every couple weeks? No, they hope you pay estimates, which are how many times a year again? 4, right, quarterly. And that you file a fair and honest tax return at the end of the year. If you get a W-2, do you have any place to play around on your tax return? Is there anywhere to write off anything or muck around with anything? Absolutely not. If you're an independent contractor, there's all sorts of little nooks and crannies that you can explore for write-offs. So the IRS wants you classified as an employee as well. So they make the penalties really, really stringent if you mess up. Okay, if you misclassified, but you issued a 1099 miscellaneous, right? So you really perceived relationship. You treated the people like they were contractors. You issued a 1099 and they put it on their 1040, then the penalty is going to be waived. And we're going to see, I don't think right now, but as we get down the road a little bit, there's ways to get around the penalties if you complied with a statute called Section 530. Okay, other specific situations where you're not paying FICA. Government employees, this hasn't been true for, I don't know, maybe 20 years, but probably even longer than that. I think it was late 80s. In the late 80s and before, if you worked for the federal government, you didn't pay OASDI or HI because you're covered under a separate retirement system. So you didn't pay into OASDI or HI. I taught in the California State University system in the mid-'80s, so I was a state employee in California in like 86, 87 during grad school. And same thing there, I didn't pay into OASDI, HI those years because I was part of the California Public Employee Retirement System. But that's gone pretty much for all purposes. Impatriots, an impatriate is if somebody's coming into America to work. So an expatriate's when you go like to Kuwait to work. An impatriate is somebody comes here from Poland and works for a couple years. They don't have to pay FICA because they're not going to take anything from the American retirement system, are they? And family employees, if you're a small family business, like you're a sole proprietorship or LLC, I think, and you have your own kids working for you under 18 years old, you don't have to pay FICA on them. So that's a good tax planning tool. You have your kids work for you, pay them a wage, they don't have to pay FICA, and you get a tax write-off on your corporate tax return. Household employees. Household employees, again, it's like your domestic help, and if you pay them more than $1,900 a year, you do have to pay FICA on them if they make more than $1,900 a year. Do you have to issue them a W-2? You got a nanny? Sure you do. You have to pay workers' comp on them? Sure you do. You have to match them for FICA and do all that compliance stuff? Absolutely. Okay, this is something that's been really hard for the IRS to get a hold on. That's, without being categorical, it's also in a lot of urban areas, married into a lot of the people that are filling these positions aren't legally authorized to work in the country, so there's kind of a series of issues around it. Additional exemption, if you work in the penal system, you're an inmate, you don't pay FICA. If you're a medical intern, student nurse, or worker serving temporarily in case of emergency, no FICA. Okay, I see, we know, again, not to beat a dead horse, but the hiring agent does not pay or withhold FICA on a worker classified as independent. And last bullet, the independent contractor is liable for his or her own FICA. Now, here's on net earnings. That's a really important word, these last two words. What does that mean? What are net earnings? So, for example, let's say that I am a dog groomer. And my revenue is $36,000. And I took cash out of the business for myself of $18,000. What do we call that in accounting if you take money out of your own business? A draw, good. And my expenses, my operating expenses, right, so all my supplies and my rent and all that was, how much do I pay FICA on? How much am I going to pay on? Any guesses? Net earnings, it said. Expenses. My operating expenses. One more time. 24,000. So I billed 36,000 to my clients. I paid out 24,000 in, or not even paid out, because I could have some expenses accrual, right, like depreciation or something. And then I took 18 grand to draw. That's what most people would think, is that you're paying on your draw, but you're not. You're paying on the net earnings, which is so whatever that is, 12 grand, right? 36 minus 24. Okay, make sure you understand that. Because in some situations, say that I'm that pet groomer and I'm trying to save to build a building, and my partner has sufficient income that I don't per se need cash. So say that I took no cash out of my business. I wanted to save it all for next year, right? Because I want to put a down payment on a building. Do I still owe FICA? I didn't take a penny of cash. Sure I did. My net earnings were revenues minus expenses, 12,000. Do you see how, try and explain that to clients. I know you didn't take a penny of cash this year, but you owe $2,700 in FICA.
So technically speaking,
The draw is not income. The draw is absolutely not income. The IRS could care less in a sole proprietorship how much cash you take. You take none. You could pull it all out. You could incur debt and pull it all out. All they're going to look at is revenue minus expenses. So when we go back to this term again, net earnings, which is the last two words on the slide, that's what I'm talking about, revenue minus expense. Okay. What are taxable wages? Well, obviously, any cash that I pay you, wages, salaries, bonuses. The second bullet's kind of interesting. What if, like a lot of the campuses in San Francisco, the big tech campuses, Amazon, Facebook, Yahoo, Google, they all have very high-end organic cafeterias on site. So, and let's say every day I go have a organic, burger or salad or whatever. I mean, in San Francisco dollars, that's a $20 lunch 5 times a week, right? What happens to the value of those meals? Is that included in my W-2? It is. So it's not really a free lunch because it's taxable wages. The only time your employer can give you meals and lodging that doesn't show up on your W-2 is if it's for his or her, that's actually not right. That should say for employer's convenience. Oh no, what are taxable wages? Okay, so let me say this again. These are double negatives, kind of confusing. So in the example of Google, was that for the employer or the employee's benefit? The employees, right? I don't have to get in my car and go somewhere and eat, or I don't have to pack a lunch, right? I get to go through this cafeteria, I swipe my badge, and it's like one day I get something for $6, and the next day I get a $30 lunch. It all goes on my ticket, right? So they're picking that up. It's for my benefit. At the end of the year, is that going to show up on my W-2? Yeah. Versus I own a peach plantation in Alabama, and I am 60 miles from the nearest town. And you guys all drive out to pick peaches all day, and I feed you lunch. Whose convenience is that for? That's for my convenience as the employer. Because I don't want you to leave for 2 hours to have to drive to go find lunch somewhere, right? So that's for my convenience. Then is that going to show up on your W-2? It's not. So what they're saying here is, what are taxable wages? If you get food or lodging for your convenience, that's a benefit to you, that's taxable for FICA. Also, the fair market value of non-cash compensation. Gifts, stock payments, stock options, anything like that. So if I give you, and this is oftentimes misconstrued, at the folks' house that we were at a Super Bowl party on Sunday, I'd never been to their house, and in Clinton, and I walked into one of the rooms, and there was this, like, really cool sort of prepackaged looking sauna. And I said to the lady whose house it was, I'm like, oh, that's really cool. And she said, oh yeah, her husband works at Carl Tyler Chevrolet, and he just got this sauna for a bonus, he said. Okay? Was that a free sauna to them? Why not? Totally showing up on the W-2. They're going to pay federal income tax on that. They're going to pay FICA on it. Carl Tyler's going to have to match the FICA on it. So I don't have any idea what a sauna costs, but I'm assuming $5,000. It's got a big unit and nice wood and glass, right? So fair market value of non-cash compensation, that's includable.
You can decline to get those, right? 'Cause my employer,
You absolutely can. Who do you work for?
work at TV.
Okay.
And we get like trips or like monthly bonuses for premiums that we sell.
So cash bonuses, heck yeah. Give it to me, take the FICA, I'm still ahead. Give me a trip to somewhere I don't have the time to go, or I'm a single mom, or I can't afford to be once I get there. What good is that to me other than a tax bill? I'm never going to San Martin, right? And people don't realize that. What time do we have? Okay, so, all right, let me just finish this one really quick. So if your employer gives you a car to use, You know, like if you do any sort of driving in Western Montana, they want you on the roads in the winter, they want you to have a big, you know, SUV. And I'm like, I can't afford a big SUV. They're like, well, here, have the company one. And by the way, hold on to it on the weekends. What's the value of that to me? Well, yeah, and I don't, all of a sudden I can get rid of my shitty little car. I don't need to have a car payment or pay insurance or do upkeep or register it, right? Pretty huge benefit. You suppose that's taxable? Yeah, the IRS wants a piece of that. So the way that they do it is you have to report how many miles you drove personally. And then there's a big chart on the IRS website. And depending upon what kind of car it is, so it's a Lexus 2016 SUV, it's going to be 95 cents a mile taxable to me that I drive personally. They give me a 72 Pinto, probably 2 cents a mile. Go ahead.
What if you pay for the gas maintenance yourself, is that right off?
Yes, good question. If it shows up as revenue on my W-2, you bet I can write off any charges I have against it. Not my personal gas though, but my office or my work-related actuals. Okay, so let's just stop there because I see people are packing up and that means attention is dwindling.